What's going on, guys? It's your boy Stonk Scrubby here, back again with another video. Today we're going to be talking about PayPal, which is down 25% on the day. Definitely not looking like it's having itself the best quarter ever. I don't know, I just figured we could talk about it, because why not? Let's go. Alright, so overall in the market today, there's a lot of companies that got beat up. Facebook, Meta Platforms down 20%, Snapchat was down 20%, but I felt like talking about PayPal the most because 25% is a bigger number than 20. There you go. PayPal shares dive 25% after company blames inflation for weak guidance. You know, call me crazy, but I feel like one of the benefits of PayPal and its advantage as an investment over like traditional banking or, you know, something along those lines is that, like, they have a lot less overhead, so rising costs should affect them less. Obviously, they're still gonna have costs, but, you know, I think it's funny that PayPal's out here like, inflation is just eating away at our business. In my mind, PayPal should just be in place of like making transactions, sending money from one friend to another. I don't know if inflation is stopping how much people are using it for that purpose, but it just seems interesting to see, you know, one of the online financial platforms talking about inflation, because it's like y'all costs should, in theory, be lower. That's one of the best parts about having an online business. Shares of PayPal were down more than 25% on Wednesday, a day after the company provided weak guidance that it blamed in part on inflation. PayPal reported mixed results for the fourth quarter, earnings per share of $1.11. Excluding items, missed the $1.12 expected. It beat on revenue estimates though, reporting $6.92 billion versus $6.87 billion expected according to Refinitiv. But it also said it expects first quarter non-GAAP earnings per share of 87 cents, while analysts had been projecting 116. It also anticipated that revenue would grow 15 to 7% for full year 2022 on a spot and foreign currency neutral basis. Analysts expected over-year revenue growth of 17.9% for 2022. So it's not like PayPal is necessarily going to go bankrupt. It's not like PayPal is in a situation where they're not making money. You know, it's just the worst thing ever. The problem that PayPal had was that they were just a little too hot for too long as a stock, right? And when your stock is up a crap ton in the last couple years, and you know, you're trading at a 50-time multiple, which basically what that means is a multiple is like however much money they made last year. You take that, you multiply it by whatever amount to get to their current market cap, right? So like, for example, let's say PayPal made $1 billion. In this hypothetical world, let's say that their market cap is 50 billion. The multiple would be 50 because it's 50 times 1, right? PayPal was at 50-time estimates, like 50 times multiples. And when you're trading at a 50 times multiple, it's really important that you are nailing expectations, because the only way that that multiple is sustainable is if you keep making that much money or more. So if they're expecting revenue growth of 17.9% to justify this 50-time multiple, right? And you come out and you say maybe 15%, obviously that's going to throw off all the models and the estimates that all these investors have been expecting. So it's a situation where, like, when you're doing so good, expectation is perfected. Like, I can't invest in a company at a 50-time multiple if they're not going to beat or meet estimates for their quarterly earnings, because it has to be very well run and executing incredibly to justify it trading at 50 times earnings in the first place. In an interview with CNBC, PayPal CEO Dan Schulman said the company took a measured approach to guidance but expects revenue to accelerate in the second half of the year. He pointed to challenges including the transition of a former owner, eBay, to its own payments platform, and exogenous factors, or exogenous hopefully, like inflation bringing down consumer spending and supply chain issues disproportionately impacting cross-border payments. I mean, yeah, that's the way the ball bounces. If you're a payment platform, then people continuing to make payments at the rates that they used to be making is very important. Obviously, with inflation, you're going to have people reducing their spending, looking for more ways to cut back on money, spending more money on more necessary things than whatever they're buying on PayPal. And on top of that, the wombo combo of supply chain issues doubles down, right? Because, like, not only can people not spend money because they don't have as much money, on top of it, even if you are are going to buy stuff, it's taking forever to get here. I mean, I'm not sure how much that's making people buy less stuff. I personally, like, I've cut back a lot on what I buy. I'm not trying to, like, brag or anything. I'm just saying I might be in the category of people just not using PayPal as much anymore because it's like, I don't know. Stuff takes forever to get here. It's not exactly the quality I expect it to be all the time. Like, yeah, I think all of these trends are working against them. That being said, when you're in the business of like a payment processor, you know, taking money from one bank, sending it to another person over an app or whatever, your entire business model is completely subject to how much people want to spend money. Yeah, if people just start saving their money and not using PayPal, you're just screwed. And what's unfortunate is that's just kind of out of PayPal's hands. Like, there's nothing PayPal, the company, can really do to change inflation rates whatsoever. They're just kind of at the whim of whatever happens. Which, you know, is why with higher interest rates coming up, it's looking like inflation isn't cooling down as much. I'm not surprised that their forecasts are getting smaller and weaker, just because the reality is I don't know how spending is going to reach early pandemic levels with all the stimulus checks again, especially with inflation being as high as it is. I'm no financial expert, this isn't advice, I just don't know how you beat when everyone was home and given money in terms of spending. PayPal also missed user growth targets due in part to 4.5 illegitimate accounts that joined the platform, which affected the ability to achieve guidance in the quarter, the CFO said. The company also walked back its user growth goals, which Rainey said was a choice to focus on sustainable growth and driving engagement. Block, the fintech service platform formerly known as Square, was also down more than 10%, and Buy Now Pay Later service Affirm was down more than 9%. Yeah, this is also not great news. See, like, one of these things by itself is not great news, but lowering guidance when you're at a 50 times multiple and then also saying that you missed growth because there was so many illegitimate accounts, I don't know how they expected investors to react to that, but like the only way people could have reacted to that at its current pricing and valuation is not the best. You know, I don't think there's many things that people invest in where they'd feel really comfortable if people came out and were like, we were going to grow our user base, but there were so many fake accounts that we couldn't. I don't know, man. Like, that's just not something in my mind that boosts confidence through the moon. Canaccord Genuity Capital Markets analysts who maintained a buy rating on the stock lowered their price target from $315 to $215 and wrote in a note that the challenges are mainly short-term headwinds. While the pace of growth in net new accounts is expected to moderate in 2022, we are seeing a steady increase in user engagement metrics and expected to see more marketing behind driving engagement in 2022. And already, PayPal has shown that it remains nimble despite its size and exploiting rapidly emerging communities, scaling an impressive buy now, pay later offering, and a launch of quality equity trading. Listen, I don't think this situation is as bad as a lot of people do. Like, I'm not a financial expert, but some people are like, oh, it's down 25%, it's going bankrupt. Like they say, I don't think this is necessarily, you know, the end of the world. I don't think it's necessarily guaranteed only short-term problems, but that being said, I do think PayPal serves a purpose. There's definitely a user base that consistently use it. I just don't necessarily know if, like, the buy now, pay later thing is the best thing for a company's margins or, like, revenue in general, because I don't know, all right? I'm not a financial expert. This is just my thought on the whole buy now, pay later thing. Do you really want to be loaning the person that doesn't have enough money for a hoodie right now $40 for them to pay back over 3 months? Like, if that person doesn't have the $40 on hand to buy the Champion hoodie, do you really think that they're going to be in a position to pay back a loan over the next couple months? And that's not me trying to shame anyone. I just feel like, you know, what was it? Affirm that, like, most of their loans aren't getting paid. And it's like, I mean, I don't know. When you loan people $30 because they don't have $30, it doesn't surprise me that they don't have a bunch of money to pay back the loan with interest. The analysts expressed optimism about the previously announced Venmo partnership with Amazon, which they say could be the single largest catalyst for PayPal in 2022. BTIG analysts who downgraded the stock to neutral and removed the 270 price target said in a note Tuesday that PayPal is now a show me story, and they cited new areas of uncertainty, including the significant shift in the company's approach to customer acquisition and engagement. They also pointed to the company's comment that the full-year forecast was cautious, due in part to inflation and supply chain issues, what the analyst said offered a sharp contrast with the more upbeat annual outlooks offered recently by the card networks. That last bit I find the most interesting personally, because it did raise a good question to me. You know, I'm not saying PayPal's lying. I'm not saying anyone's telling the truth. I don't know. This is all I'll say. Visa and MasterCard didn't really seem to say that inflation and supply chain issues were going to be a drag on their business the entire year. Whereas, you know, PayPal comes out and they're like, guys, this inflation thing is slaughtering us. It's horrible. Listen, I know they're not the exact same business. Okay, maybe PayPal is way more exposed to inflation than Visa or MasterCard. That may be the case. But that being said, I think they still would have mentioned it's going to be a problem in a major capacity one way or another if a majority of your businesses comes from like payment processing either way. Anyways, I just figured that was what I wanted to talk about with you guys today. PayPal down 25%. You know, I'm no financial expert. I just feel like talking about this stuff sometimes. If you enjoyed, please be sure to press the like button. Let me know in the comment section down below what you thought. And of course, subscribe if you're new. Turn on those notifications. If you really want to help me out, I'll put a link to the intro song down below, along with a link to my podcast, The Scuffed Cast. Or, of course, you could use code SCRUBBY at the G Fuel checkout. Great way to get discount on G Fuel. Help me out at the same time. And the last link in the description is going to be a link to the merch store. So if you go get yourself a t-shirt, I would really appreciate it. On that note, that'll do it, though. Don't get anyone pregnant. If you do, make sure they're hot. I'm out. Peace.